USD, the dollar advanced globally on Monday, tracking the US 10-year yields. Sentiment seems to be rooted in two parts. First, worries ebbing from last week's key risks, hurricanes, North Korea and the fear of inaction with the Trump administration's tax reform policy. Second, short covering in anticipation of this week's FOMC meeting. USD rallied to highs of around 111.65 on bullish sentiment. JPY, the Bank of Japan meeting on Thursday should be fairly uneventful and markets are not expecting any change in policy or stance. However, PM Shinzo Abe may dissolve the lower house and call a snap election after his US visit, the 22nd of September. GBP, last week was eventful for GBP, with the Bank of England's, BOE, resolute hawkishness coming as a surprise, and even Archdove Gert unexpectedly jumped on the rate hike bandwagon. However, BOE Governor Mark Carney's speech overnight was not hawkish enough, resulting in a knee-jerk sell-off for sterling. In his speech, Carney stayed cautious, especially Brexit-related risks. He repeated the guidance of coming months that we heard from the BOE MPC last week, which suggests that rate hikes would be gradual and limited. He wants the MPC to act consistent with monetary policy continuing to provide substantial support to the economy. UK PM Theresa May was in Canada yesterday to discuss Brexit and trade with PM Justin Trudeau. She will be giving a speech on Friday in Florence, outlining the government's post-Brexit vision. USD, all eyes on FOMC announcement this Thursday. For the FOMC meeting later this week, the Fed is widely expected to announce a reduction of their massive $4.5 trillion balance sheet. Investors will also be looking closely at inflation forecasts to see if the Fed is downplaying the recent string of weak inflation prints as transitory. Citi analysts call for a 25 basis point rate hike in December remains contingent on core inflation remaining somewhat stronger in September and October, while markets are pricing in a slightly over 50% chance of a December hike. We teach that trades should be entered and exited at or very close to key support and resistance levels. There are certain key support and resistance levels that should be watched on the more popular currency pairs this week, which might result in either reversals or breakouts. TradeCMX, trade with capital market exchange.